Hi, this is Zach Muir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Friday, the 15th of July. Starting off with Capex Limited, and it looks as though we've got decent rebound here at the 50-day moving average at 4.71 pence, also the floor of this rising trend channel from December. Extended uptrend line in the RSI window as well, which suggests that we could head as high as 7p given the momentum we have behind the stock. If you're cautious on the shares, maybe wait for an end of day close above end of week close rather above 5 pence, and even above this old resistance from back in March around the 5.5 pence level. But it looks as though enough has been done really with the latest price action seen on Thursday. Stop loss back below the 50-day line and really only back below the 200-day moving average, falling at 4.30, would even begin to question the recovery argument here. On to a stock which has had its issues over the recent past, but Phalanx Group finally looks as though we've got a selling climax in place, and bear trap rebound from below the former support there from May at 3.55 pence, above that on an end of day close basis, and we should head back towards the 6 to 7 pence area, which is where the 200-day moving average is currently falling at the moment. Hummingbird Resources, the next stock here, overall rising trend channel here from as long ago as November. Looks like we might need to test for support towards the 50-day moving average and the floor of this channel at 23.73 pence, but at least while above that area on a weekly close basis, the overall target here over the next 1 to 2 months is high as 35 pence, which is the 2015 resistance line projection. One of the stocks of the moment is Metal Tiger, breaking that symmetrical triangle rather, very comprehensively for Thursday's session, also breaking through the 50-day moving average of 3.67 pence, and really with that broken now above the 50-day line, one would expect quite a quick move up to the top, or the May resistance area at 5 pence over the next 2 to 4 weeks. Stop loss at this stage back below the triangle, that's around 3.25 pence, but as I'm suggesting, or I've suggested, it doesn't look as though we will need to test for support now, given the extended consolidation that we've had within this post-March triangle. MX Oil stock I haven't looked at for a while, but starting to look a little bit more interesting here. Basically sideways moves over the recent past, but we do have this upward trajectory provided by a rising trend channel from March, and that's based at 0.8 pence. While we're above 0.8 pence, as stated previously, the target here back towards 1.2 pence over the next 1 to 2 months. Obviously, it has taken rather longer than was expected before, but the RSI pushing back above 50 again, and that could be a positive sign over the near term. Next up on Zima Ventures, which has been testing for support over recent days. Looks as though this could be the last test for support towards 1.4 pence. This is a bull flag formation here, and probably looking for an end of day close or a weekly close back above 1.6 pence, and that resistance line there from June to trigger the new leg to the upside, which continues to be a 2.5 pence target. The trick here really is that breaking that line means that you wouldn't really have to wait for a break of the 1.75 pence zone, which has been the main resistance there since June. Another stock which we've been waiting on in the recent past is Prospect Oil and Gas. I was expecting this falling wedge formation to be broken earlier in the month, and it has done that quite successfully. 2-3 days above the 50-day moving average as well. That's at 1.12 pence, and that's a positive there. Initial target back up to the 200-day moving average in form of May resistance at 1.5 pence, and then after that the big target, the top of this broadening triangle from the beginning of the year at 2.5 pence is a 2 to 3 months time frame target. Finishing off with a stock which hasn't appeared here for quite a while, a bit of a mess, but looking as though we've got that final, or had that final bear trap from below former June support at 13 3/4 pence, and that could take the stock back up to at least an 18 to 19 pence target over the near term. After that, then we can start penciling in bigger targets, but at least the first leg of recovery looks to be on tap here for Sterling Energy. That's it for me. More updates at the same time on Monday.